Hello, trading is closed on August 29th, 2018. Let's go over our calls. We said the open was important today. We said if we gapped down sharply, can make a case that this high would hold. We said otherwise the pattern would lead to lower prices unless it were invalidated by gapping and promptly taking out this high, which is what happened. We have the same pattern we've had now for 5 straight days. We gap up, hit new highs, can't hold them into the close. Same rule works. Either gap, either direction, and take out the high promptly, or else lower prices print. Doesn't mean you have to close lower. It's kind of unusual to gap up 5 days in a row. Usually after 3 you get a pullback of some kind, and it's really unusual that you gap up 5 days in a row and then sell off into the close. Stan Weinstein had an indicator based on a strong open and a weak close. He felt it was the public going long and the specialists not wanting to hold overnight. He thought it had negative implications, but a lot of patterns with negative implications tend to get tossed in the garbage can on this pretty strong move. Tomorrow's pattern's the one with the early high and the late high. The vast majority of times it's a bullish day and rallies into the close. Closes near the high most of the time. When it doesn't, it tends to be a straight line move down. Well, we did get a sell signal today, but that's been satisfied. Nothing much else. Well, this kind of, it comes close enough for me to invalidate this to mark sell signal. The one thing he says is you have to confirm this move by trading over today's close by at least a tick. After a rally like this, it shouldn't be too hard to go over today's close by a penny. But if we gap down and do not close the gap, this break and ruining of the pattern does not count. Well, the market seems to be ignoring all kinds of signals. Here was this nice channel we drew, burst right through it. We have another fib target today. I'm not going to risk any money on it. If it works, you can look back at the end of the day and say, see, I told you so. The one thing I am going to pay attention to, though, is pointed out by somebody else. I really like learning from other traders. If you connect this high and this high, you get a perfect hit at today's high. You can draw a parallel channel here. See how important today's high is. This isn't a perfect Fibonacci target, but it's close enough. So you can see we've rallied to a resistance area once again. This is a TD line, and when you break either tomorrow, only for tomorrow, gap over it, in which case it's a sustainable move, or you pass through it without gapping, in which case the move won't stick. But just trading over it at all, over today's high tomorrow, well, a little bit over the high, the cross over the line, trading over it's a significant breakthrough, and the only question is whether it's obligated to retrace. If we break through it without gapping over it, it's obligated to retrace to the line, but that doesn't mean the bull move's over. If, on the other hand, you stop right here, at least you can justify it based on the resistance level. Tomorrow's pattern's usually positive. All we have to do to confirm this and print higher prices is to gap up and close over and trade over this high early. If that happens, I don't see anything stopping us. If we gap over this, there's no reason to have a retrace. Really, I think just about the last chance I can see for the rally to fail, if it's going to fail, would be to gap down smartly tomorrow and never go over today's close. It looks like pretty much of a long shot to me at the present time, but we'll have to see where the open is tomorrow. If we gap over this high, it could be off to the races again. And that's today's call.